Bitcoin just broke out. Ethereum's upgrade is days away. Whales are buying. BlackRock is all in. But here's what no one's telling you. While most traders are watching price, the smart money is watching flows, fundamentals, and upgrades. And what we're seeing right now could mark the exact moment institutions flip the switch on this bull cycle. From massive Bitcoin buys above $95,000 to Ethereum being 92% of a multi-billion BlackRock fund, and a surprise Ethereum event on May 7th that could change everything. In this video, I'll break it all down with charts, evidence, and my personal targets. This is not the time to sleep on crypto. Let's go. Let's start with what the billionaires are doing, not what they're saying. On May 4th, Michael Saylor's MicroStrategy added another 1,895 Bitcoin, dropping a cool $180 million at a price of $95,167 per coin. That's not buying the dip, that's buying conviction. MicroStrategy now holds 555,450 Bitcoin at an average of $68,000. So if you think $94,000 is too high to buy in, remember, Saylor just showed you it's not. And it's not just MicroStrategy. Grant Cardone's $5 billion Cardone Capital just announced it's buying over 1,000 Bitcoin, worth $100 million. That's real estate money pivoting to Bitcoin. Let that sink in. Major real estate funds are choosing digital property over physical. This isn't retail euphoria. This is capital rotation. Now, let's talk charts. Take a look at this Bitcoin 3-day chart. After months of sideways chop and a clear descending wedge, we've finally broken out. You can see that beautiful yellow trend line snapped clean, with volume confirming the move. And the targets? Based on the Fibonacci extension. $95,900, $110,000, $131,000, and the dream target at $166,000. Now, look below at the Harsi indicator that Fibonacci RSI momentum is lifting, signaling strength. Bulls are waking up. But that's just half the story. Because while Bitcoin leads, Ethereum might just outperform everything else. Ted Pillows just dropped a bombshell. BlackRock's Biddle Fund? It now manages $2.7 billion, and 92% of that is allocated to Ethereum. Yes, you heard right. The world's largest asset manager is quietly choosing Ethereum as its core crypto position. Meanwhile, an Ethereum whale just scooped up $4.75 million worth of Ethereum on Binance. On-chain data doesn't lie. Someone is betting big. And here's why. Let's talk real-world assets, RWAs. In the latest Cointelegraph post, Ethereum leads the RWA league with $6.55 billion in tokenized assets, up 30% in just 30 days. That's more than 2.5x the value of the second-place chain, ZK Sync. You want utility? You want fundamentals? Ethereum dominates where it actually matters: RWAs, stablecoins, smart contract integrations. And here's the chart to prove it. On the 3-day chart, we've just broken out of a steep descending channel. That yellow trend line is a thing of the past. Harsi is turning bullish. Price sits around $1,800, and the Fibonacci roadmap shows $2,750, $4,100. And long-term, we're eyeing $8,500. It's not a meme. It's math. If all this feels like a lot to keep up with, the charts, narratives, yield opportunities, that's exactly why I wrote DeFi Financial Freedom, the Ultimate Beginner's Guide. It's my $4.99 ebook that breaks down staking, yield farming, airdrops, and passive income in crypto without the fluff or hype. Thousands of smart investors are using DeFi to beat the market, not just trade it. And if you're watching this video, you're clearly serious about crypto. So don't just hold your Ethereum or Bitcoin, put them to work. You'll find the ebook link in the first pinned comment. It's the next logical step. Now back to the macro flow. According to CoinShares data, a staggering $2 billion flowed into crypto funds just last week. Add the previous two, that's $5.5 billion in 3 weeks. Bitcoin leads with $1.84 billion, but Ethereum is quietly heating up, with $336 million entering Ethereum-based funds over the past 2 weeks. And this is before the May 7th Ethereum upgrade. Institutional money doesn't FOMO. It prepares, it positions, and it builds before the crowd catches on. If you're wondering why Ethereum demand is spiking, here's the alpha. On May 7th, Ethereum will undergo its most significant upgrade yet in terms of EIP count. This could improve gas fees, transaction flow, and open up new staking and modular design opportunities for decentralized apps, exactly what institutional players want before scaling adoption. Ted Pillows put it simply, buying Ethereum now is like buying Bitcoin at $4,000. This upgrade isn't priced in, not even close. So, let's tie it all together. Bitcoin broke out. Institutions are pouring in. We have clear targets at $109,000, $131,000, and $166,000 based on Fibonacci. The market structure is shifting bullish, and it's backed by data. Ethereum? Arguably even more explosive, because it combines technical breakout, institutional accumulation, real-world utility, and an imminent upgrade that could light the next fuse. If this plays out the way I see it, we're not just entering the bull market, we're entering the institutional phase of crypto, and the best gains go to those who position early, not perfectly. If this video opened your eyes, don't leave empty-handed. Grab the ebook, DeFi Financial Freedom, the ultimate beginner's guide, and learn how to earn yield, spot airdrops, and make your crypto work harder than you do. Like this video if you learned something. Comment and tell me, will you buy more Bitcoin, Ethereum, or both? Subscribe to stay ahead of the noise. And if you want even more alpha, check out my previous video, linked right here on screen. Stay sharp, stay early, and I'll see you tomorrow in the next one.